I've posted the link twice on the room, and I've said this morning what time the links will be posted. So it is 7 o'clock. We'll do the admin section of the webinar first. So as people come in and log in and they're a little bit late, it's fine. Then they just can go along. It's beginners class tonight again. I will go through the market again and teach you guys some tricks in the market. I know there's questions that we've got on the trading room that I asked for, what we want in the trading room, or in the webinar tonight, so I'll handle that first. I hope all of you guys registered for the cup that you all get. Go to ACM Gold's site, that you open up a demo account. Are you participating in the competition? There's 500,000 rands of prizes to be won, guys. They already gave a lady $1,000 live account with ACM Gold. So if you're one of the novice traders and you don't have money to open up an account, I think you must go and immediately go register. Go to acmgold.com, go register a demo account of $50,000. You go to FX Blue. You go register your account on FX Blue. They will send you a link to your email address. You click on that link and you go to the competition African Forex Cup 2015, and you go and click join. And you will join us and we will see how we trade the markets. There's all the places first to 20, number 1 to 20. George always put a nice update for us on the Trader Lounge. So go, please go and register. If you don't have a live account, that you don't have money to open up a live account, then you go and register and trade on the demo account, which you then will win prizes. Yes, Katlego, there is an FX Blue link. Everything here on the right hand side, you will see you can just go click there. It will take you to the various steps, and then you just trade. And it's not the first 10 or the first 5 traders that will win prizes, guys. It's everybody. There's lucky draws. There's maybe a prize like in golf. You play golf and they win the prize for the most golf is the last place. Maybe there's a prize for the last trader as well. So don't think if you don't trade well that you will win nothing. There's prizes for everybody. Alright, so Katlego, yes, go click on the link, go to George van der Riet's post on SA Trader Lounge, go click and open up. Alright, that accounts. So I hope you other guys did it well. Alright, I want to start tonight with the following link. This was very nice. What exactly separates the best traders from the rest of the pack? I found this in the Intuitive Trader, and we're going quickly some trading wisdom. I think it's good for guys that start out in trading to know what differs them from being a novice trader and being a professional trader. And I think all 13 years is very good. Alright, they understand their motives for trading. Why are you in this business? What do you want to do? Do you want to do it full-time, part-time? What is the aim of trading? They understand their motives. They develop trading strategies that work for them because they fit their personalities. That you will learn as we go along, which trading system will fit your personality. They enjoy trading and make it effortless. Guys, I wake up 2 o'clock in the morning and I analyze the markets. If there's fundamentals in Australia, I get up. I like this business. I enjoy trading even when my girlfriend takes her 2 little boys to the beach on a Saturday morning. I said, no, I just want to sit here for an hour, analyze the markets. I just want to know what the market's going to do for the next week so that my job is done. Alright, most of my work is over the weekends. They work hard at developing their skills and maintaining a trading edge. Self-explanatory. They trade with total confidence in themselves and their methodology. They trade in a positive state of mind that allows them to flexibility to act automatically and know exactly what is the next step to take. We will handle that tonight as well in the psychology of trading. You can make a screenshot of this, print it out, or go to Twitter, Trading Wisdoms. You will find this 13 point here, the Intuitive Trader, or you can Google it. It's a very nice to have against your wall. Alright. They intuitively understand money management and risk control and know that no single trade is worth not being able to trade tomorrow. Very important, number 7. Money management. They have strategy that works and the discipline to carry it forwards. They are independent minded and understand that they are personally responsible for their market decisions. It's not my mistake and it's not George's mistake, Jeff, I mistake. It's no institution's mistake if you wipe your account. It is your own responsibility to click sell and to click buy and to put in stops and put in limits. They understand the difference between loss and losing. They understand the importance of acting in difficult times with circumstance risk. They know what drives market and what is the difference between hope and fear. And they don't trade to please others. Alright, so write down that 13 or make a screenshot, put it against your wall. I think it's a very nice thing to have, to keep you motivated, to keep you in trading when days are dark. When you find 3 or 4 losses in a row, it happens to me as well. You need something like this to keep you up and to keep you going. Alright? Everybody happy? We're going to the markets now. And I'm scrolling down to see where is the questions that the guys want me to answer tonight. Alright? Right, let's start off with this. Dlamini, if you get 5 minutes or so during the webinar, could you please cover some basic setup for MACD and Stochastics indicator and MT4 please, time permitting. Yes, there is time, that is why this beginner's class is here. We'll do that first. The MACD and the Stochastic. Alright. The MACD indicator is not one that I use often. The Stochastic is also a very nice indicator that will show you when price is oversold and overbought. Guys, one thing that you keep in mind is that price action, if the market is bearish, and if you were downward here, we're in the Australian dollar, if you just look at this, I'm going to draw in a trend line to let you guys see in which area I'm talking about. Alright? We're in a downtrend here. The Stochastics is showing oversold, oversold, oversold sickness here. How do I know that it is oversold? Because it's under the 30 or the 20% line. That's indication that the market is oversold. So Stochastics is an overbought and an oversold signal. If we're in a bearish market, in other words, we are going down, we don't look at the oversold signal. We leave it alone. In a down market, we only look at the overbought signals. Why? Because when the market is overbought, I want to sell in the direction of the trend. And this trend is downward. So I want to sell in the direction of the trend when the market is overbought. The same with a upward market or a bullish market. If I put in my trend line and the market is bullish, I will not look at overbought signals on the Stochastics. I will look only at my oversold signal. So I will only buy at the bottoms because my market is going upwards. Alright, that is one of the first rules of trading, basic rules that I know all of you learned, is that you must trade in the direction of the trend. Alright, bringing in the MACD. The MACD is basically just 2 moving averages that they put some indicators or some signals in. And this is a very nice thing to use together with the Stochastics. I will show you a trick now that I've learned a few years ago in the books that I've studied. So I'm going to take a few markets here and just explain to you the MACD together with the Stochastics. Alright, MACD can show you trend. You'll see here at the top where the market turned, the MACD crossed. The fast line is the blue line. It crossed the red one, which is the slower line, and the market just went down. Alright, as long as the blue line is underneath the red line, you know the market is bearish. You are looking for sell signals. Alright, so now let's look at the stochastics in this bearish market, because my MACD is open, bearish. I want to look for a retracement in the stochastics and I want to sell. So let's leave price action. Let's just look at the two indicators here at the bottom. Alright, we're in the bearish market. We are looking to sell because our MACD is open. The blue line is beneath the red line. And I want to sell with a retracement when the stochastics wants to turn down again. Alright, so there's one. I'm just going to mark it here for you. There's a vertical line there. Look at that one there. There's a cross down. Where's another cross down? I'm not looking at the top at price action. I'm just looking at the bottom here. And there's another one. Alright. There's the two lines. Look here at the top what happened. This line and this line. Look where the stochastic showed me that I can sell. Right at that turn and right at that turn. Do you see how I use the two together? Obviously when the market breaks up, I want to look at buy opportunities, and I will look at the stochastic down here, right, to buy or come down and then rebuy. Obviously in this indication, that's why I chose it. This one didn't work because we bought here, but obviously my trend line moved, and we will do trend lines tonight. My trend line moved and we're still in a bearish market. Alright, I hope, Klamini, that answers your question. We'll go look at some few other examples now, some few other markets to see how it works. Any questions on that? The stochastics and the MACD. Guys, indicators are lagging indicators. Always use them as confirmation, not as the alpha and omega. If you want to use indicators to base your trading on, you will find yourself in trouble, because indicators is very nice in a market that trends, in other words, an up and down moves, but as soon as the market goes sideways like this, look at those indicators there, you've got trouble. That will give you buy and sell signals in a sideways market, which you don't want to do. Alright? Other thing that people or traders forget about the MACD, there's a zero line, guys. Beneath the zero line we are bearish. The market will come down. And above the zero line, the market is bullish. Let me show you some examples. Let's go to the monthly chart. This is a zero line on the monthly chart. Look how the market goes up when the MACD is on the positive territory. Positive territory here as well. When the market is beneath the zero line, we are bearish. We're getting bearish. The market is getting in a bearish mood. Alright. This example again. You'll see here the market showed the MACD crossed at a high. We're showing it's a bear market. The market is coming down. And we want to sell the retrace of the stochastic. So if the stochastic is turning up and MACD stays open, I know there's a sell signal because the stochastics is faster. It will show me the retracement, and then we will sell in the direction of the trend which my MACD shows me. Alright, Postman, there's a question. This is where stochastic confused me. In that pair there was no overbought signal, so do I supplement it with MACD in that case? Alright, very important, before you use the stochastic, please determine the up market or the down market. Are you bullish or are you bearish? If the market is bullish, you will not look at overbought signals at all. You will only look at oversold signals because you want to buy in the market. And when the market is bearish on the MACD, you will not look at the oversold signals, Postman. You will only look at overbought, so that you can sell in the direction of the trend. Let me show you example why. Guys, please, everybody, just put off the microphones. You're interfering, and we're going to get confused here. So just make sure that your audio is off. You can type your questions for me, please. Thank you. And Alright, Postman, look at this market here. We're in the Australian dollar weekly, and we're in the bearish market. Okay guys, there's someone with the microphone on. Please put it off. Can everybody hear me? Alright, we're going on. Alright, this market was bearish from the 26th of May. The price was 9,700 on the Australian dollar. This market, or the stochastic, show it was oversold, and this market fell another 1,000 pips. That's why you don't use the oversold signal in a bearish market. Is that clear, Postman? Alright, good. Let's go look at the yen for an examples. Again with the stochastic and the MACD. Another good example of the triangle, guys. If there's a triangle, everybody knows your triangle and your price action. If there's a triangle in your price action, guys, I like it when the MACD or the RSI also show me that there's a triangle on the indicator. Very good. Why? Because the price is getting contracted. It's in a triangle. It's getting pinned down. I know that my indicator must show me that the price is getting pinned down. Look at what happened here. My MACD broke out to the positive territory above the zero line, and the blue line was above my red line, the fast line. So we know that this is a bullish market. As soon as the market breaks out here, I know it is a buy. And look at my stochastic here as well. My stochastic turned down in a bullish MACD. So that is a way that I know that the market is coming down. Guys, if you don't put this microphone, if you don't put it off, we'll start this whole thing over. Please work with me. You're interfering, everybody is hearing you. Please put it off. Let's respect the people that are here. We all want to see what the market is doing, and we all want to learn something. And remember, if there's interference now, there will be interference on the YouTube channel for the guys that want to work with it afterwards. Alright, any questions on the MACD and the RSI again? RSI is your overbought and oversold signal. We know in which market we are working, and the MACD is the one that shows us direction of the trend. Alright guys, on your team viewer there's a microphone and a speaker button, or you can take your microphone out of your PC, please, or mute your microphone. Alright, I want to look at divergence. Divergence will not be seen on a stochastic ever. Divergence will be seen on a RSI, and I will show you now. We'll close this one. We'll go to the following slide. Alright, I think I've covered that. Let's look at some other markets or some other questions. Alright, divergence, guys. One last thing. Divergence is when price goes up but my indicator goes down. That is bullish and bearish divergence. And I will look at examples. Alright, this is divergence. Price action is lower, indicator is higher. Alright, that is divergence. That is a sign that the market is turning. You will also find it on your MACD. When your MACD gives you divergence, you know that the market is more likely to turn. So let's see if you can get this somewhere. So let's put in a MACD here. Okay. Divergence. Look at the trend line going down, but my indicator, especially the MACD and the RSI, show us upwards movements. That is divergence. The market is turning already on my indicator but not on my price action. It's no reason to buy, it's a reason to see if there's buying opportunities. Alright, there's no problem, Katlego. I just ask everybody to put off their microphones. You will see there's a button on your team viewer that you can mute. If you can't find that button, please take out your jack out of your PC. Alright, we're going on. Alright. Indicators, are you happy with my answers there, everybody? MACD and the stochastic? Right, thank you, Katlego. Alright. Everybody happy? Let's go on. Alright, so this is divergence. If you get divergence for the third time, most times there's twice or three times, you will see divergence. Yeah, this was once, but there's certain times that the market will make a third down and there's a third up on the indicator. The third one is even better. So if you get a three-way indicator and divergence with a price, it's even better. Did you guys understand resistance and support the last time that I explained that? Alright, here's another example of divergence. There's the RSI that I use a lot. Look at the price action here. The price action came down. There's a low here, down here. There's a low and a lower low. But on the indicator, there's a low and a higher low. And look how the market turned there and went up. Indication that the market is turning. Same in a bullish market. If I get any divergence here, I know that the market is most likely to turn. And obviously I see here already there's a lower high on the indicator, but there's a higher high in price action. So what is happening here? The market is still going up, but it's losing momentum. And obviously we know this is a bearish market. The market is coming down. We will be looking for selling opportunities. Selling opportunities will come when I have divergence, which I know. Now, if I add my stochastic, and I'm looking for selling opportunities, I know I can sell when the market is overbought. Look at that stochastic on the daily. There's divergence on the daily. My indicator is at a high or an overbought signal. I know somewhere in this area I would like to sell because this is a down market. I'm not looking at the oversold signals. I'm just looking at the overbought signal here on the stochastic, which I have. And now the last thing that I will use to enter is candle information. If that candle information either by a pin bar or an evening star or a double top like this or maybe a tweezer top, then I will look at candle information to see when I can sell that market. This is a British pound. This is also a 38.2 retracement of Fibonacci. I don't know if you want to guys want me to do Fibonacci tonight, but there's a nice 38.2% retracement that the market can bounce off there. Can go a little bit higher. You can see I've marked that in yellow. That's actually one of my trades that I'm looking at the moment to enter short around 5,550, and that is a British pound. If it gets to there, I will see what it says. Alright, any questions around that? Going to the next question here. Alright, Rian is sorted with a account. MACD and Stochastics, we did it. Alright, that's the only 3 questions that we had on the SA Trader Lounge. I will just go on with my presentation again. Alright, so let's start from the beginning. Let's clear this chart. Let's do a typical example how we will look for a trade. Put in my stochastic again. I'll delete this one, my RSI. And I'll enter my MACD. My MACD is a little bit different than yours, guys. I don't know why it is like this. Let me just find it first. I don't use the MACD a lot. Alright, so this is the same thing where the bars cross with a red line, and that's the same as the other MACD. Alright, I always go to the monthly chart. I always start on the monthly chart because I want to know where the market is at the moment. Alright, so if I go too fast, you guys must stop me, ask questions. I will show you how I look at the market, if there's any patterns that I can see, and then I will bring in my indicators. And let's see typically how it works when you want to look for a trade. Alright, so what do I see here? A trend line I can draw from the top to a bottom there. Alright, so I know that's a resistance there. Let's try and put it straight. I see that as my following resistance. And there's another resistance there. And I can put in some sort of bar support here. Can be future resistance. Alright, there was a little bit of noise. So I can get a picture around this chart here. And I also maybe want to put in a trend line that looks like this. That was also bar support, which can be future resistance. So this is some kind of a triangle, was in the euro. And then I can put in my Fibonacci's, my hidden support and resistance lines. I can put that in. And I see here that the euro went up bullish, retracing in a triangle, and is now bouncing on the 618%. Alright, so that is my overall look or my feel about the euro. Yes, Mafike, this is just the Intergram MACD. You will see that the blue line, tops and bottoms, is actually the cross of the crossover. But MACD has 2 lines. Yes, correct. So I'm just using another one. Alright, and I look at my stochastic. My stochastic shows me that it's oversold. I'm not interested in oversold at the moment. Why? Because this market is extremely bearish. I told you that we're in a bearish market. You will not look at the oversold signal. I see that my MACD is turning downwards. Alright. That's a bearish market, which is confirmed by all that black candles. That is a monthly chart. So I'll rather be looking to sell with a retracement. Do you guys agree? Ian, you've got a question of wave 2. Remember, this is the beginner's class. Next week we will continue with the Elliott wave principle. I will not do it in this lesson. That's an advanced lesson. I alternate every 2 weeks between the advanced and the beginner's class for the novices. Alright? This is actually ABC. Just to answer your question quickly, ABC, but we'll go into that next week. Alright, so I'm looking at the bearish market from this resistance. Remember, there's no trade here at the moment. I'm just looking and analyzing the market. I'm looking to see if I get a trade. Alright, this market is extremely bearish. Look at that. Stochastic showed me 2,000, 3,000 pips ago that it's oversold. That is why I'm not using an oversold signal in a bearish market. Guys, this I've learned probably 7 years after I've been trading. No trader taught me this. I taught myself. And I've learned that a stochastic doesn't mean anything in a bear market. Doesn't mean anything when it's overbought in a bullish market. It will run you down. Alright, let's go on. Alright, here we've got the MACD. MACD is crossing upwards. So we maybe can see a bullish market, but you can see on this price action, the price action is sideways. Alright, let's explain the oversold and overbought signals. This is only on the stochastic. There's a question from Reinhard. What is overbought and oversold? Alright, if you look at the stochastic, there's an 80 line and a 20 line, Reinhard. If the stochastic is below the 20, it usually shows you a oversold market. And when the market is above the 80, it is usually an overbought market. In other words, you can find that the market will then correct. Do you see how the stochastic goes up and down from 80 to 20, and it usually is the same with the price action here on top of. Look at that, highs is the same as the stochastic. It is because the market is overbought here. The market will correct from the tops. And look at the oversold signals here at the bottom, where price action is at the bottoms. There the market will also correct. That is overbought and oversold. Right. Bearish market, I'm not interested in stochastic. MACD shows me that I'm in a bearish market. Remember that we're bouncing off the 618%. I can see this price action or the candles is sideways. There's no trade for me here, guys. Not at the moment. Although my indicators are showing some stuff going on, this is a bullish MACD. Remember that the MACD is very low on the daily. It's not even on the zero line. So although it's crossing up, giving a bullish sign, it's not in a bullish zone on the 0 to positive territory. And because of this sideways price action, you can see that this indicators is just going up and down, crossing. So according to the indicators, this is just a sideways market. Alright. No trade here on the euro if you're using the MACD and the stochastic. Let's go to the British pound. Let's clear this again. And let's put in the MACD again. Alright, here we go. And we'll clear that. I'll do that later. stochastic and the MACD. Alright, so let's look at examples starting from the monthly chart. Alright, look at the overbought and oversold signals on the pound, on the stochastics, and we're looking for crosses with the MACD. Can you see here when the market turned that there was divergence? It was a lower low on the MACD, but it was a higher high on the price action and a lower high on the MACD. That is divergence. My stochastics was in an overbought territory, but remember that this is bullish. I will not really look at that. My thing is here that I looked at divergence, and that market crossed here with the MACD. And obviously, if I put in my trend line, the market broke out of the trend line, came back, tested it, and all my indicators lined up, and there was a good time to short the market. I'm just doing indicators now. We'll bring in some other stuff just now. Alright, looking at the top, the market is bullish. I won't be looking at that at all. Why not? Because it was an oversold signal already at that price on 5. Let's make it 500, and the price went up to around, what is that price? 7,100. 5,500 it was overbought because it's a bullish market. I will not look at it. Alright, here the market turns, MACD crosses down, my trend line break. I will short that market. If I'm not in that market, I will go down to a daily. I will look at my MACD. When my MACD is still bearish, but my indicator is showing at the stochastic a retracement and coming down again, crossing down. That is a place to sell in the market. There, on that high, the indicators was bearish at the bottom, retracement on the stochastic, and we fall from there. There's another sell signal. Looking only at overbought now because we're in a bearish market. How many tops do you see on the stochastic? 3. 1, 2, 3 places that the stochastic showed you that you can short the market. And obviously for the last confirmation you will look at an indicator which is price action, which is your candle information. What happened here at the bottom? My indicator is showing up, the market is going up. Alright, there was a nice buy signal. Look at this, my buy signal here. Listen to the MACD that shows us bullish, and we're waiting for a retracement on the stochastic. As soon as that retracement crosses up again in a bullish market, I want to buy. There was a nice place to buy there. There's another one. At this bottom here, the market or the indicator showed us that that was a buy. Alright, I will be hesitant now because of my resistance. That is that high. And obviously we're still in a bearish market, guys. I will rather be looking to sell. And if I look on the 4 hour, I can see some divergence here again. Look at those 3 tops coming down, but my price action shows us 3 tops that's going up. That is divergence. That shows me that the market is losing tempo or losing momentum to the upside on the 4 hour chart. I will rather be looking now that my indicator shows here that it's overbought, because in the long run we are still bearish. So I'll rather look on the 4 hour for an overbought signal that is in line with my bearish view. Yes, the trend line broke, but we can see this is a sideways or a slow moving market. I will not be looking to buy unless that resistance breaks, and that resistance is only on 5,600. So in all due respect, this market is still bearish. There's no resistance broken. The indicator is not, or the trend line is barely broken. I will not be looking at being bullish on the pound dollar at this moment. Any question at this stage? Something that you want me to cover? I'm doing the yen. Remember, I can give trades every day. I can show you all the setups, all the indicators on Trader Room, but that will not help you in the long run. I want you to see it for yourself. I want to teach you to do it by the book. Don't give a guy a fish, learn him to fish. Teach him to fish. Alright, and then I will remove my RSI and we will go. Yes, Reinhard, I use the default settings of the MACD and the stochastic. Alright, let's look at the yen. Alright, the market came down. This is a monthly chart. I want to see some background. Where are we at on the floor, on the chart of this currency? Alright, we saw a nice downtrend line there. And this is also a trend line. This is a longer term trend, so the market broke both of them. MACD was here at the bottom. My indicator showed me it was totally oversold. We're in a bearish market, and you will see from there we had a bullish MACD, bullish price action. So now we are bullish. Bongani, your MACD parameters, it's not the same as mine. MACD default settings are 12, 26 and 9. Stochastics 833, yeah, I know Dunapoli use that, 833. The 1453 is also the stochastic default. You can play with the settings, see what works best for you. Remember, I always teach the guys, don't use the indicators as a reason to buy and sell. Use price action, look at price action, decide what you want to do, and then if your indicators confirm, then you know that you have a trade. Alright, price action always first. Alright, so what is price action? Price action is the trend. For an example, this is a bullish market. It's making higher highs and higher lows, and the trend line is up. I'm going just quickly down, and I want to settle this. We're in a bullish market. You can see it on your charts, on your price action with your candles. You can see we are bullish. Your indicators will be bearish and your indicators will be bullish. You can see with your eyes that we are going up in the chart. So there's no reason for this market that you want to sell if the price action is bullish or the trend is up. Alright? So if this trend is up, I want to use my indicators rather to buy than to sell. And when will I do that? If my indicator is bullish on the MACD, alright, there's the indicator bullish, and my MACD comes down and shows me oversold signals. Let's remove the moving average, the MACD. We're working just with a stochastic now. Alright, just with a stochastic. Look at the price action. We are bullish. We can put in some trend line here that shows us this is a triangle. Alright, that's fair enough. Even on the weekly you can see it is some sort of triangle. You know it's the upward price action there, or bullish price action. Your trend line is here at the bottom. There's also some nice triangle. We know that the triangle is a trend continuation pattern. We're in a bullish market. Right. Katlega, I'm coming down to your question just now. Alright, so what do we want to do in a bullish market? We want to buy. When do we want to buy? We want to buy when our indicator is oversold. We're only buying when the indicator is at the bottom. Alright, I'm going to put in some lines for you. There on the cross Let's put it at the top. On that cross, there was a reason to buy. Look at this price action. From there, it was a retracement and we went into direction. We are bullish. Here's another one. Look at that stochastic cross. We're looking for buy signals. Look at the indicator here and the price action. Bullish. There again, bullish. And we can see at this final stage we are bullish, but the indicator is at the high. So it's basically in the middle. It's not as low as this. So just looking at price action and the stochastic, we know that we want to buy in oversold signals and we don't want to sell in the overbought signals. Obviously, when we are coming down in the market, in other words, the Australian dollar, we're in a bearish market, we will look at the stochastic at overbought signals, and from there we know we can sell. Alright, Katlego, your question. New Zealand dollar is bearish, and on a daily, these funny candles and stochastics oversold is a gut call. Right, let's go to the New Zealand dollar. I'll put in my indicators quickly. Let's do this first. Let's clear it. And we'll do that with a MACD. Alright, and bearish on a daily. Right, let's go to the daily, and we're on the New Zealand dollar. And what do you see here, Katlego? Did you see that this is a bearish market? Why is it a bearish market? Because I'm looking at the chart and it's making lower lows and lower highs, and my trend line is from the top to the bottom. Alright? Although my indicator here, the MACD, shows me that it's getting bullish, yes, correct, it's bearish because of my price action, because of the trend. I don't look at my stochastics or my MACD to show me the trend. I'm looking at the price action, my candles. Alright, so we are bearish, and if you are bearish, you want to sell rather than buy. What can I still see on this? And I'm going to play a little bit, and I'm going to do this. And this is what I want to teach you guys. No indicators. If we find a trade, then we will determine if the indicators is correct. Alright, if the indicators. Alright, so this is a monthly. We're going down to the daily and the weekly. I'm starting with price action. What do I see? What do my eyes see in this market? I'm bearish. Alright, that's a nice sign that there's a bearish market. And if I zoom in, I also can see that this is a support, that's a support, that's a support. And I want to work with this little section here, because the market made a downward channel. There was a little bit of a channel there. Market broke out. And I want to put in that line, because we know that past support, we did it 2 weeks ago, past support became future resistance. We know in a bearish market, so Katlego, what do we want to do in this market? We would rather like to sell. Okay, where would I like to sell? I would like to sell against that trend line, maybe on that past support becomes future resistance. And I will do a lesson on Fibonacci's. If I draw in my Fibonacci, I can also see on that past support as future resistance. I will rather be looking to sell in that market and go with a trend. Happy with that? Now we add an indicator. I will bring in the stochastics first. Alright. We want to sell in this market. We didn't look at the indicator. Look at that indicator. Overbought. So is that a confirmation? It's almost a confirmation. We determined we want to sell. We want to see where do we want to sell. Now we bring in the indicator and it shows us overbought signal. Alright, so let's go down to the 4 hour. Then you will see that the market from there already broke down, but I don't like it that much. This market is still sideways, but let's keep it on the daily. Now the last thing, yes, the last info one you want to see is candle formation. If I get a pin bar close to the 618% fib zone, and if my indicator on the 4 hour goes up from here, but because this already unwind, because of the sideways movement on the 4 hour, look at this sideways movement here, it's almost like a head and shoulder. This stochastic indicator already unwind. It's not overbought anymore on the 4 hour. I must wait for time that the market goes up, that indicator is at the overbought signal again. Yes, on the daily it gives me an overbought signal. If I really want to see a trade, I want the candle information. And what is candle information? Something like a pin bar. That is a pin bar, or a shooting star, or a dragonfly doji if you want to call it. That's New Zealand 1 hour chart. Okay, so obviously there's 3 lows there. I just want to see, I'm just quickly analyzing the market. My head goes. Alright, and let's put in the MACD. Okay. MACD is bearish. Look at that cross. The diagram is beneath the red line, so the blue line is beneath. It is a bearish market. If I go down to the 1 hour, guys, I'm going to tell you something about time frames now. I don't see any trade here. Why not, guys? My daily does not give me a trade. My MACD is bullish because the market is retracing, but my indicator is an overbought signal. Can you understand and see? Do you understand why there is no trade? Do you see how the daily, the 4 hour and the hourly give me some info that is contrary to each other? So the 4 or 3 charts doesn't line up. That is a market that is not ready to be sold yet. If my daily is overbought, if my 4 hours overbought and my 1 hour is overbought, I know I can sell against that trend line. Always use 1 or 2 or 3 time frames rather than 1, because it will give you different perspectives of the market. On a daily market, yes, we are overbought and we are still bullish with a retracement. But the other markets, the 4 hour and the 1 hour, hasn't lined up yet. If the 3 doesn't line up, you do nothing. You wait for the market. You already determined that you want to sell. You know where do you want to sell, and now you are waiting for your indicators to line up. Everybody happy with that? Right, any other questions? It is difficult for me to know where your guys at. Some guys come in and they don't know anything about trading. Some guys like Ian is more advanced, so this is maybe a bit frustrating to them. But I must cover everybody. This is why you must ask questions, guys. This is why I'm here for an hour and a half, 2 hours, so that you can ask me questions. If there's something that you want to know about indicators, then I will explain it to you. If there's something that you want to know about price action, I will show you. Trend lines, I want to show you. Channels, there's a lot of things that we can cover, but if you don't ask questions, then I don't know where you're at. And I like questions. I would like to help you guys, so that you can trade on your own and don't need to pay $300-400 for a service that show you where to buy and to sell. Okay, let's look at this Canadian dollar. Do you know, guys, there's the head and shoulder pattern, and do you know triangles, double bottoms, double tops, price action? That's very basic stuff. Cyril, there's a question. Do you use all indicators simultaneously? Cyril, no. Me personally, I only use the RSI. That is my own personal opinion or personal trading method. I use only the RSI, and I use the RSI that shows us the relative strength index, and that shows me divergence on the RSI. That is a higher high there, but it's a lower high on an indicator. So there is guys that uses the RSI on its own, and I think the MACD stochastic is a good way to start off with indicators. I agree with that. Like you explained, the MACD will show you divergence as well. They show you the direction of the trend and when the trend is turning. And together with that, you will use the stochastic to show you overbought and oversold signals. So the MACD and the stochastic is a very nice pair that you can use together. But I don't suggest that you use more than 2 indicators at the bottom. That will get confusing. Rather use those 2 indicators with your price action. If you get candle information at the top, or some sort of resistance that and your market is overbought, that you can sell that market. So I suggest 2 at the bottom, your MACD and your RSI simultaneously, and you use your support and your resistance at the top, or your price action, your candle information. Clement, yes, that is what I'm saying with this market. I would like to see that the daily, the 4-hour, and even the hour of any market lines up. Or even if it's a monthly, the weekly, and the daily. So if we're in a bearish market on 3 charts in a row, I will know I can take that trade. Look here at the top where I'm clicking now. You can work on your monthly, weekly, and daily. Those 3 line up, then you can trade. You can take your weekly, your daily, or 4-hour. Those 3 charts line up, then you can trade. And obviously your daily, or 4-hour, and a 1-hour. So 3 charts in a row, 3 time frames in a row. If those 3 line up, I suggest you've got a good chance with candle information against the resistance that you can sell that market will up. So let's look at the pound, for instance. I know on the daily that my market is overbought. I'm looking for sell signals because we're lower than that resistance. We're in a bearish market still in the British pound. Although MACD is not lining up, I don't like that MACD, so I'll give the market a little bit more time. Remember, the longer the days will walk here or goes by, the higher the MACD will go, and the market will then turn the MACD to the bearish side, which will happen when this price action always turns around here at the resistance. So that is a good sign on the MACD, on the daily. If I look at the 4-hour, this market can still go up because I see some divergence. Alright, I would like to see the divergence work. Although my stochastics is not overbought at the moment, so I'm not interested in that. And my last thing will be on my 1-hour chart. If I see all those 3 charts are lining up, then I will sell that market. So let's throw a stone in the bush in 2 weeks time. Let's see if the British pound goes up when this MACD starts to turn here at the top. And that market stays beneath that resistance. If I get a candle information, let's see if my 4-hour and 1-hour candle lines up, and then we can sell that market. Alright, same with the Japanese yen. Look at that bottoms in the triangle. We know that it's a trend continuation pattern. When the bullish market, we will rather buy here at the bottoms. Going down to the 4-hour, look at that low there, but the market is sideways here. I rather want to buy down here on the support line of the triangle. I want to see this. I want to see the market come down to this bottom trend line. This is a trend continuation pattern or a triangle. And then if my stochastic is in an oversold signal here at the bottom, also on the 4-hour and the 1-hour, I will take that trade if I get a candle information. If I get a nice spike down here, when the market turns around like this, then I will buy. So let's look at this example in the past. This little red line here, we're in a triangle at the bottom on the support line. Look how my stochastics was oversold. The market turned around. Let's see if that happened on my 4-hour. This is my 4-hour chart. There's the red line. Do you see, guys, how the stochastics here at the bottom? That was a good sign. Here as well, my 4-hour lined up with my daily. Do you see that? Daily bottoms, 4-hour bottoms. That is lining up. And when will I enter the trade? When my stochastics here at the low. Look there. There's the red line. Remember, this is a daily line. So this is a bottom on the stochastic. There I will enter long. And let's go to the other example. Where's that other low? There's the red line again. Look there again. My daily, my 4-hour and my 1-hour lined up. Stochastics oversold. We bought on the trend line and we're going. Those are the examples that you want to look at. If you want to trade with indicators, let 3 charts in a row line up. Christine, what time on the monthly you use to draw the trend line? 6 months, 2 years, etc. Alright, on the monthly. I don't care the time that it takes, if I understand you, Christine. Let me just clear this. And we're working with the Japanese yen here. I work with highs and lows. It doesn't matter how far they are from each other, as long as I draw my trend line in the correct manner. And I will show you now which is the correct manner. On the monthly we'll go down to the daily, we'll go down to the 15 minutes even. A trend line is a trend line. Trend line in a bearish market is always at the top, guys. We want to know when that trend is broken. You can extend that one. Do you see how my trend line goes over that high? And look how the market bounced off that trend line and then broke through it. That is a good trend line. Trend line is always more than 2 points. The more points you have on a trend line, very, very important. The more touching points that you have on a trend line, the stronger and better that trend line is. Let's look at that one. This is an inner trend line. Market is bearish, so my market goes from top to bottom. Alright, this is the low. Look how the market broke that trend line, came back and just exploded from there. How will I draw my trend line in a bullish market? We connect the lows. There's a low that we connect. That's our outer trend line. Let's delete this one. Alright, that's my outer trend line. And there was no trend line there. Okay, here's a question. Why do I don't draw a trend line there? This is very important of a trend line. Why is that blue trend line not a trend line? That blue line is drawn incorrectly. That is not a trend line because that trend line doesn't show me a trend. From this high, remember that is my first high, or my highest high, excuse me, that is my highest high on this chart. The rules of a trend line states that you must touch the low, the first low before that high, and that is that low. That was my trend line before the market turned sideways. I will tell you again. I will repeat it. The rules of a trend line states that if there's a highest high on my chart, the trend line must touch the low before that high. That is that candle there. That is my correct trend line before the market went sideways. This is the correct trend lines that I draw in after the sideways movement, and we can see it is some kind of sideways movement or triangle, and that's why I can use my trend lines like that. Everybody happy with that? I will show you more examples. It's a bit confusing now. I'm going to try to explain it very, very nicely. Look at this downward trend line here. This trend line is incorrect. That is not the correct trend line. On this chart, my low is down here. That is my lowest low. And the rule of a trend line is it must touch the high before that. So that is correct, my correct trend line. That was the trend line that this market broke. Same with this one. That's a correct trend line because that was my last low and it touches the high just before that. That is a correct trend line. There's the low, there's the high. Let's draw a trend line on a market that's not as sideways as this. Let's look at the 15-minute pound. Let's go 5-minute pound, guys. This is just for trend lines. I don't work with 5-minute charts, but let's look at this. There's my low, there's my high. It's a bullish market. I can use a trend line like that. That's correct. But also there's an inner trend line like that. Do you see the inner trend line and the outer trend line? If the market breaks the inner trend line, it will most go likely to the outer trend line. Alright, so there's two trend lines. That's a trend line. There's the low on the chart, and it touches the high just above it. Cyril, let's do that quickly. That's a very good question. Cyril's question is it safe to trade in a sideways market, or do you take caution? Alright, this you will learn with time. There's two things that you can do in a sideways in the market, and there is ways to trade in a sideways market. I don't like it, but let's look at an example and see if we can bring our indicators as we are doing stochastics and MACD tonight. Let's see if we can use the indicators to help us in a sideways market. Right, this is a very good example on the euro. This is a 4-hour chart. To answer you from the start, Cyril, I would take caution in a sideways market. I would like to trade with a trend, and why is that? It's because in the sideways market, the market is correcting. The bulls and the bears are in fight with each other, and obviously when the market does not move, we are not making any money. So I don't want to buy this if it is going sideways all the time. It's not that I want to throw caution, is that there's no money in this market. It's a sideways market. So I would rather stay in a market like this. I would rather sell at the right times when the market is moving. I know in the market for 3-4 hours, maybe 3-4 days, and I'm making money. Into the other example, this sideways market when nothing is going on and I'm just paying my broker all the time. But let's see if we can use it to our advantage. Strong sideways movement. Alright, obviously we know that is our resistance, and we've got the support here at the bottom. Let's delete that indicator and let's do this. Alright, so we're in a sideways market here. We know that is our resistance. This is our support, and maybe we can put in a line there as well, because this is also a support. I don't want to trade here, but if I want a scalper, how will I trade this? The only reason and way I should trade this, if I'm a scalper, in other words, quick in the market, quick in, quick out. As soon as the market is at my resistance, Cyril, I can look at my stochastic and my indicator to show me if that market maybe is turning there. Look how high, remember this is sideways, how at the resistance the indicator shows me overbought signals, and here at the bottoms the indicator shows me oversold signals. Same with my MACD. My MACD is turning bearish, but remember, if you open a trade here at 1,500 and your stop is, let's say, 100 pips away, your profit margin will also be 100 pips away. That's not much. That's not very good. And there's no reason why the market should not break that resistance. So yes, caution in a sideways market, but the indicator shows us oversold signals at the tops, at the resistance, and overbought signals at the bottoms. When will I enter a trade? On a 1 hour or a 15-minute? When my indicator shows me overbought and I've got a candle information, I will sell and I will keep it until my support. And if my indicator has it oversold and I'm at the support and I get my candle information, I will buy and I'll only take it to the resistance. Alright? Good. Postman, how many rules of the trend line and what they? Oh, and can you please show them on the markers? Alright, Postman, I just did that, but I'll do it again. Obviously, you know that a trend line in a bearish market goes up from up to down over the resistance, and the trend line must touch the high just before the lowest low. So my trend line, this is not a trend line. That trend line is down here. So let's take an example. Imagine this market. This market from here, we are selling and this market breaks and is taking out this low. Alright? The market from there breaks down and it takes out that low. My trend line will shift to that high. Why is that? Because this will be my new low and that will be my last high above the low. My trend line will shift from previously to this to an active trend line like that. Trend line must touch as much of the price action as you can. In this bullish market, that will be my trend line. Alright? This was my previous trend line. Let's delete that one. Let's take that one out. Before this high, if that was my highest high, forget this at the right. When this market was here at the top, that was my trend line. As soon as that high is taken out, I must move my trend line to the previous low, and that is a correct trend line. Some more examples. I'm just going to show you some trend lines. I said we're going to do that tonight. That's just a quite easy one. You can draw a trend line like that. That's a very aggressive trend line, but remember, there's a few lows here as well, which is some kind of wedge trend line there at the bottom. It shows us support, and both of those trend lines broke with that price action, and the market came down. Obviously, we're in a bearish market. As soon as we're in a bearish market, the trend line is down. The trend line got tested here, guys. The trend line broke, but remember, very important, my resistance is not taking out yet. My resistance still stands, and I will not buy this market until that resistance has been taken out. Price action before any indicator. Any more questions? Do you understand, Postman? There's not really some kind of rules that you can apply to the trend line. That's only what I've learned the past few years. There's some other guys that also use the highs and the lows of a trend line or of the candles. Other guys say you cannot cross the candles. You use the trend line that works best for you. Most importantly, downward trend line in a bearish market, upward trend line in a bullish market. Sideways market, you can put a high and a low there. That's a triangle. Alright, I had this trend line previously. I had it like that. I thought the trend line is already broken, but there's some madness in this, that this can still be valid. I suggest this market will come down to this bottom here I told you previously, and that the market will break out bullish. Why do I know that? I know that the triangle is a trend continuation pattern. Obviously I will look at my stochastic here, If my stochastic shows me an oversold signal, my MACD is up, I know this is a bullish market, I will rather buy this than trying to sell a market that looks like this. I suggest you trade rather longer than 5 years before you pick a turn in the market. I know George van der Riet is very good at it. He can spot a trend and he can spot when it's turning and then he jumps in. But that takes a few years. There's a lot of fundamental noise or fundamental news. There's a few other stuff that you can use to show us when the trend is turning. Some markets that you want to look at, guys, some more indicators that you don't understand how to use. This is very basic. Remember, you only get in a trade when the resistance and the support is taking out. When the trend line is broken, that's no reason to buy or to sell. You must wait for your candle information. Your indicators must line up. This is a very, very basic rules. For the guys that came in last, I had a thing here, Trading Wisdom. There's 13 points. You can take a screenshot now, or it's on the YouTube later this month, in March month. What exactly separates the best traders from the rest of the pack? And you can read there's 13 points there from the intuitive trader that I just spoke about. Things like work hard. I think there's only one guy in the country that's got longer chart hours than me. That's a good friend of mine. This takes a lot of time. Your eye must get in the practice, guys. It's just like golf, just like rugby, just like any sport. You must train yourself. You must train your eye to look at the markets. You must train your eye to see that this is a bearish market and where the corrective moves are. You must train your eye to see the candle information. Just you train your body to have the perfect swing in golf. You train your eye to see where the market is going. It takes hours and hours of trading and testing and looking at the charts. What trades I'm looking at the moment? Yes, I'm looking at the pound to short it around 150.50. The New Zealand dollar I'm already short. I think I'm a little bit premature on the New Zealand dollar, but I'm already short on the New Zealand dollar. I'm actually short on the Canadian dollar, which doesn't make sense, but let's see how that trade works out. And I'm not on the euro. The pound, I took 110 pips the other day. I put this trade on the SA Trader Lounge for you guys. We bought the pound for 100 plus pips. Alright, Bongani, you've got that's a very good question, the Ichimoku. I will show you how to use it. It's a very complex one. I don't know even. Alright. This is a very confusing one, but I'll try to explain it to the best of my ability. It's really not a nice indicator. Let's see here. Okay. Okay. You will see there's basically four. This one's got five lines on it, Bongani. You will see a red line and a blue line here. That is also crosses, support and resistance. And then you will see the cloud. The cloud also has got a crosses or a support and resistance. You will see when the market comes down, you will see at the resistance zone. You can see the market is in the resistance zone or in the cloud, and then the blue and the red line crosses, and the market turns bearish from there. As well as the cloud is at the bottom, the market comes into the support area, which is the cloud, and then the market breaks up, the blue and the red line crosses up. Alright, so that's basically how to use the Ichimoku cloud. Guys, I'm really not a good fan of indicators. Indicators is a lagging indicator. It's lagging price. So the price action determines what the indicator does. You don't want to use the indicator. It is lagging the market. You want to use your brains, your trend lines, and your candle information, which is up-to-date data, which is a leading indicator. It will show you where the market is going. And then you just want to put in an indicator to confirm that your view is correct. That's why they brought in indicators. I can show you, I'm too scared to show you this, but look at this example. We call it robots. I'm really not a big fan of robots, but I'll show you this. Some guys actually ask money to this. You can buy this stuff for $200 on the internet, and this basically is how it works. It is a robot. In other words, this is a 4 moving average robot that will show you buy and sell signals. How this one works is that you've got 2 slow moving averages and you've got 2 fast moving averages. Alright? So as soon as the slow ones is crossing, it shows you the trend, and the faster 2 indicators show you the buy and sell signals. Alright, this is just an example. This is crap that you can buy on the internet. Alright, so looking at the daily chart, the black line is the slowest one and our green line is just below it the whole time. So the green line is showing a bear market, and the red and blue lines will show me where to enter. And the rules are that you only enter when the market is showing a bearish cross. Why? It's because we're in a bearish market. So we're not taking the buy signals, we're only taking the sell signals. But we've already done that with the indicators as well. So this little robot tells me that I can sell there, I can sell there, and I can sell there. And the rules are that if the market crosses up, the red crosses the blue up, you get out of the trade. Alright? So this is crap that you can buy for $200 on the internet. And the reason why it doesn't work is that in a sideways movement, in a sideways market, it looks like somebody is dying on a operating table. There is a lot of noise on this market. This is giving me buy-in signals all the time. Why? It's because an indicator is a lagging indicator. It does not work. Alright? This will wipe your account as soon as the market is going in a corrective manner like this. Look at all those buy and sell signals. Indicators or robots is only made to work in trending markets. It will not work in sideways market. Here's the euro. Look at that buy and sell signals. If anybody can tell me what to do there, I will be very glad. It's now 5 years and I haven't figured that one out. Same with the Ichimoku cloud. Very nice indicator if you want to use it after you've done your analysis, which is price action. Okay? I'm not the one that shoots down indicators. There's a lot of nice ones there, and I will tell them now again. The stochastics that work with a MACD because they complement each other, and I will use the RSI that shows me the strength of the market that I will use. And then there's some few other stuff that you can use. It's like the stop and reverse levels, which will show you where stop and reverse replacement must be. Let's look at quickly some market management or money management, guys. Please, if you got a small account up to $1,000 or $2,000, don't use more than 5% of your equity on any specific trade. In other words, if I decide I want to short this market at this point, 9505, let's say I'm shorting this market, my stop should be 50 pips above that high. Alright, something on placing stops, 50 pips above that high. Why do I put my stops 50 pips above that high? It's because when that high breaks, the resistance is gone, and this market will most likely go all the way and it will wipe your account. I take 50 pips and not 5 because the market can spike. Many traders tell you 15 or 10 to 15 pips above the high. It is wrong. The market will spike you out, come down, it will fall in the direction. Okay, let's quickly look at another example. Some other markets. Where should my stop be if I want to sell this market? Alright, if I want to sell this market on a 1 hour chart, my stop should be 50 pips above that high, because that is my last resistance, and if the market is taking out that resistance, it will most likely test this high, and that high is more than 120 pips away, so that will be more than 5% of my account. If you get bigger accounts like $20, $30, $40,000 in account, I suggest you go down to risk of only 3%. In other words, your stop ratio, not 3% of your equity. Very important if you want to survive this business. Keep your risk below 5%. On a small account, bigger accounts, you can go down to 3%. That means if you're $100,000, if you trade $3,000, that is 3%. So your risk on that specific trade with $100,000 should not be more than $3,000. Alright? Stop placement, very, very important. This was very basic stuff on the stochastics and the MACD. Is there anything that you guys still want to know more? We did some trend lines. Is there anything more that you know that you want to ask? When I do the advanced course on Monday night, the next week I will put the post again on the SA Trader Lounge, and you guys can ask me questions so I can prepare to answer your questions during the webinar. Do you all understand how to use the stochastic now and how to use the MACD? Bearish market, selling, not looking at overbought signals. Bullish market, we are buying, we're not looking at oversold signals. The MACD will show us where the market is turning, and we only enter that trade if we get a candle information. Candle information, which is a pin bar, a shooting star, some other evening star you can use. And I will show you the last example. It's a very good example of one trade that George van der Riek took. Just on the monthly, I think. I can't remember where it is. Alright, anything more, guys? We are closing down with this webinar now. It's 8:30. So please, during this following week, go look at that indicators. Where do you want to enter the market, buy and selling? Please go post some questions on the SA Trader Lounge. Go please register for your demo account with ACM Gold. Go on FX Blue. Be part of the competition. 500,000 rands of prizes, guys. If you don't have money to trade, go and win yourself a live account. Thanks, Ian. Have a good night. Have a good week. It's my pleasure, Clement. I always enjoy it. I always enjoy spending time with you, being in the markets. I enjoy your questions. No questions are too little or too big. Thanks, Katlego. I hope you learned something. Thank you, Reynard. I hope I helped you. Thanks, Cyril. Thanks you very much, guys. That's it, everybody. Have a nice week of trading. I see you in 2 weeks' time when we'll be yes. For the guys that want to learn the Fibonacci levels, I will do Fibonacci in 2 weeks' time. Fibonacci we will do in 2 weeks' time. That's a nice one that we will do. Alright, guys. Thank you very much. Have a good night.